The 714 method, it's a study of specific things that happens in the market at a specific time, so you don't have to guess. So, and it takes time for one to actually focus. Okay, so time is very much important in this. When you are trading with time. You don't just sit over the markets at any given time and you just trade. It's only me who can do that because I know what I'm looking for. But for you, I want you to take this test first, right? Even with mentorship, if you have money for mentorship, Footek, don't pay. Do this first, okay? It's not about money. I know some people, they just rush to pay. Say what? Okay, so now, here's the thing. There is so many things that I know in terms of trading, right? So many things that I understand that happen in the markets. I'm not just talking about random things. I'm talking about specific things. The 714 method, it's a study of specific things that happens in the markets at a specific time, so you don't have to guess. When you know when something will happen, that makes you more patient. Rather than if, for example, I said I will be here, but I did not give you time that I'll be here. So you could have came here and just waited. But since I told you we're starting at 10 o'clock, you were here early, did the registration, and then we continued. But hence I said I will be in Pretoria Hotel 20, what's the date today? 6. So you holy call? Oh, this is pale man. How you vibe? Okay, so since it's on the 6th today, okay, let's leave that. I easily get distracted. That's why I'm like short-tempered. Because like for me, that's why I'm short-tempered. Because if I'm doing something and I get distracted, poof, you know, it messes up everything. So, and it takes time for one to actually focus. Okay, so time is very much important in this. When you are trading with time. You don't just sit over the markets at any given time and you just trade. It's only me who can do that because I know what I'm looking for. But for you, I want you to take this test first, right? Even with mentorship, if you have money for mentorship, Footek, don't pay. Do this first, okay? It's not about money. I know some people, they just rush to pay. Hey, he said this meant, I want meant. No, do this thing first. See if it works. Then you pay, you can join that extra class or you fund your account. Make money first. So you know if you're investing in something that works. Are we good? Yeah. There's the door. Okay, so this is how I trade. You need to set up an alarm. I don't know how I got here. I never thought I'd be a teacher. Right, so the actual time that you trade, it's 14. It's 1 p.m. to 1400 p.m. I like if telling you panel better than this one. SAST. This SAST means South African Standard Time. South African Standard Time. This. If your wife never bought you one, she don't love you. A watch. A man must have a watch. Sir, where's yours? Okay, so you use the watch or clock. You set an alarm around these times. These are steps to, and please, when you are writing something that I say, write in point forms. You are not writing a novel here. Write in point forms so that it's easier for you when you revisit the notes. Okay? We're not writing songs. So you set an alarm at this time. Okay? And it will be better if you do it now. Do it now. Set your alarm, 1 o'clock, 2 p.m., Monday to Friday. Okay, so set up your alarm to 1 to 2, SAST. So after you've done this, this is what will happen. Tomorrow or tonight, when you go to backtest, you will go to the charts and you mark 1 to 2 p.m. This is time, 1300 to 1400. You are going to put these vertical lines on your chart exactly within that hour of trading. And then between these two lines over here, when 1 o'clock starts, there will be a candlestick. On the opening of that candlestick, you will mark that as an opening price. So there's something called candlestick, which is like the squares you see in your actual charts. So generally you're gonna have 2, but you'll have 1. Okay? So if this one is bearish, this one is going up. So if the market is bearish, the opening price will be at the top. If the market is buying, it will be at the bottom. It will be at the bottom. So now, having seen what is happening here, one of these two will be over here at the opening price, which you get by time. 1 o'clock, the market hits, you put a vertical line, you draw a horizontal line. Vertical, horizontal. When I catch it in plane, I'm mad. Okay? So you mark the opening price. Draw it throughout. So we're going to call this OP. Opening price. So that is what you're marking. After you've done these two things, you wait. If you're gonna, your first alarm will ring 1 o'clock, you put this line and then you put this horizontal line, and then you wait. When 2 o'clock alarm rings once more, then you throw the second line. Exactly when the alarm rings, exactly when it rings, you go to your MT5, you put the line. Because if you're gonna wait, then after that's why you'll start having those unnecessary questions. And questions always comes as a result of not listening. Okay, so now you have these two opening price here that you are marking. So after, if now you wait to see, will the markets go up or will the markets go down? So you want to see one of those two things. That is the actual question you have. Within this time period, what is the market most likely to do? Will it open, go up, or will it open, go down? In terms of the range, not the candlestick. That's where other people confuse it. You need to look at the actual range between the hour. You don't look at the first candlestick. The only information given by the first candlestick at 1 o'clock, it is the opening time. That's how you use it. And then after, you want to see from 1 to 2, what was the market doing? Did it obviously go down? Or if yes, then after, if it went down from 1 to 2, at 2 o'clock or 5 past 2, that is where you buy. You buy here. Why? Because Masha said so. You don't ask me questions, you execute. If you see that the market from 1 to 2 was going down, at 2 o'clock, you buy. You will see the evidence once we go to the chart. And then from 1 to 2, if the market now will open, go up at 2 o'clock, you will sell. And then when you execute or take in your trades there, now you have something that you must have. You don't just sell to heaven or you sell up, whatever, but you must have a target. We are only looking for 50 pips. Hey, what is 50 pips, man? I will show you. Calm down. Hey, dot. Okay, so it's 50 pips here. You are targeting 50 pips on all of these. So you are targeting 50 pips on each of these trades. Whether it opens, went down, then you buy. If it opens here, then you sell here. Let me write sell. Okay, so it went down. The actual target is from this sell, it should come to the opening price. Based on what? Structure. But based on the other thing, if it opens up here going upwards, your second target is pips. So in terms of targets, we have opening price, we have opening price, we have pips, we have structure. How you want it complete. So opening price, if you buy here, your target is the opening price. It should go to the opening price. If you buy here, then you are also just looking for 50 pips. Whether it gets to the opening price or not, you just want the 50 pips. If you see the actual structure now, like, okay, I see this, I see that, but I just want it to go down, and then as it goes up, then I'll take my profits. This is the third reason why you take profits. So I'm not only showing you when to enter, but I'm also telling you when to go out, when to close the actual trade, right? So you do this when? Between 1 and 2 every day. Whether you're working or you're not working, I don't care. Go to the toilet, execute, and come back. You see? So you do this easily. This is what you want to see. So this is the primary structure of the markets, how I looked at it personally. And this is not just, this is what not just realized while I was sipping Jameson. I'm drinking it now because of this. You understand? So this came out from looking at the market for what the market really is, not at an assumption or belief of what I think the market is. That is the difference. So this is the primary structure of the 714. What is 714? You wait 7 hours a day to trade at 1 p.m. 4 candlesticks should be enough to pay your car installment. You see? So that's how it goes. Are we together? Are we moving along? Okay. Now, moving on to the second part, whereby most people are confused. We have oh, this pen wants me to be slow, actually. So we have, same thing, opening price. Extend this forward. So now, the market will open from the same price. Market opens up here, goes up there. I'm going to pause a little bit like the display. No more faggy chart, because this is going to attract my eye focus. Just put the chart. Yeah, clear it. Yeah, go options. Oui, Kosiam. Options with PC. Lo as if it's one no metric. Okay. So now, from the opening price, right? So we have a market that opens, goes up. After it's gone up, you know, Marshall said what? Marshall said it should sell. Then the market comes down, right? So after it got there, and you assuming that you win the first trade, but you're like, yeah, Marshall said it's like can still go on a bit more to the downside because that's the actual idea. You know, you want it to keep going on and on and on and on until it finds your father. So opening price, market open goes up, and then from here, the market just reverses and go up. When does the market do this, or why does the market do this? That is what is important. The market will simply make an immediate reversal here, of which I also call a continuation, when the market is bullish, like consistently bullish, like this. So the market will just keep on going up. You understand? So this will make it easier for you to understand. Because you may make 50 pips here, right? Going down. And then from here, you're thinking it's going to go down maybe like 100 pips more, 50 pips more. And then the market just reverses here and goes up, which means the 50 you made here, you're losing here because the market has reversed and gone back up. So you are losing at that point. I record? No, I record. How's it going? Phone. So from here up to there, now we have a turning point there, and then the market starts to go up. You see? So now, this is where people will start saying, 714, 714, this, he said this. I didn't say that. I said go and test this out. I didn't say you'll make $1 million. I didn't say you'll pay off your car. I said go and test this out. Because I don't know if surely you're going to do it the exact way I'm showing you how to do it. Okay? And then we have another scenario whereby the market will move early. The market will do this. It will move early, and then at 1 o'clock, then it just goes down inside 1 and 2, and then after that, it just goes up. So it may do this exactly at 14 or around here, before this or after, but around there, or in the middle of 1 and 2. So it's just an early move. Early move. Okay, it's just an early move whereby it opens, goes up, back into retesting, and then continuing up. Understand? So this is the second scenario. So when you see that it just went up a bit early and then it came down here, then you need to be cautious. It's okay. I think it's still playing along that way. They did the same thing, but they just did it a bit later. A bit earlier, I mean, this is early. And then the later trade is whereby the market from here, maybe it's going to do whatever it's been doing, and then it just continues, like goes up. Oh, I'm supposed to draw it here. Okay, it just goes up and then back here. So it's just going to start selling from 2. Often, if it starts selling from 2, it's going to overlap down. So it's more of a delayed trade, and then it goes up. So it's more likely to be delayed from here to there. Let me put D here. So it's a delayed trade. And then when that happens, also you'll hear someone say, I knew it. He thought he was the best. I never said I'm the best. I said I make money. There's a difference, okay? So, early trade, it will buy before 1, sell between 1 and 2, and then continue after 2. Late trade will buy before 1 and 2, and then just sell. From 2, where you're expecting it to like continue, it will just drop. And then basically it's gonna move late between 3 and 4, or 5, 3 and 5 actually, 2-hour gap. So it is coming back down, and then it goes up. But if it goes below, like it did here, if it goes below, this is your buying price. That's why I'm saying if you mark your opening price, extend the line. Extend the line. So if the market is going here, you are most likely to catch here. If it comes back up, you're most likely to trade there, going all the way up. So this will make you know when to execute your trade. Because you cannot just buy the market at any price. You need to know exactly when to buy. When to buy, what to buy, All of those answers you must have. So you don't just execute anywhere. I'm telling you the time of execution. I'm telling you the actual price where you're gonna trade. If the market gets to move early, you know the buying price. If the market is delayed and it moves late, you know the buying price. Samson, are we good? Very important. So this is the scenario of continuation, which confuses a lot of people. Also, with continuations, you'll find the probability of these setups more successful in a bullish market. You'll find the success of these in a bullish market when the market is constantly going up. That's where you'll see it going up, and that's where you are most likely to make more money. And then now, okay, let me just leave this one. So we're gonna do another one, which is bearish. These are the notes you're gonna refer to. So even when you lose a trade, you don't cry. You go back to the notes like, oh, it did this. So the more you get to see it, the more it's gonna be better. Yeah, so the more you see it, the more you are going to reason. Now, once more, same time. There's consistency. I'm not talking about many things. There's consistency in what I'm doing. That's how you know if something is working or not. So from the opening price, all right, so from the opening price now, I've already done it. Sorry, guys. So now we're doing the other one. So now from here, market open goes down. And then from here, you're expecting it to continue to go up. Just go to the opening price tab and then go down. This one is the same setup that happened on NASDAQ, on gold during NFP, but it didn't go as much as to the opening price. It only went up to here. So opening price down, it came up here and then continued to go down. That's the first one. And then the second one is the early movement. If the market now, let's say it's been like buying, and then from here, to here, and from here it's just buys inside. Early sell, a retest within the hours, and then drop. So it may drop before 2, or it may drop over here. But if it drops before 2, like here, start to sell, you can still enter there and take a long way short. You can still follow the trend and go all the way down. So, which is very fruitful, going down. So that can help you. These are probabilities, what you're doing here. It's more like if it doesn't do this, it does it. But the primary one is the one that we started with, which is like high guaranteed. So, and then the last one will be a delayed move. Delayed move. So it can differ in ranges. It can turn halfway. It can actually come here and then turn. But mainly, the most important thing is the opening price. Who's coughing? Right? I will pause one now. Measurement. I know. Okay, so these are actually few scenarios. The other one was a bullish continuation. This one, it's a bearish continuation. Bearish continuation, okay? So, in terms of this, we have one setup. This is the second setup. This is the third setup, of which is also part of this one, third. So here it may turn halfway, it may turn there, in terms of the probability. Okay, Are we all together? Okay. Now, let's move to the second and last slide. We're still going to go to the charts, but I just want to show you what is it that you are looking for first. What are you looking for? So it's easier that you will see it when the time is right. Okay, so after now, you have done those two things. You need to look at the pips side of things because I shown you the structures and the opening price as form of execution. So the next important thing now is the risk reward. Risk reward, right? So mostly people ask me, how much am I risking per trade? What is my stop loss? What is my target and all of that, right? But my main risk on a trade, the risk is 30 pips. That's how much I risk, 30 pips. If I want to go hard, I risk about 50 pips. I don't go more than 50 pips, okay? And for reward, I go from 50 pips to 100 pips. But primarily 50 pips in and out, okay? So now, since this is how much I'm risking, we need to consider pip value of this. Pip value, which is about times 2. I'm going to say times 2. So the pip value for gold, it's a double. If using rands per pip, it's going to be like 2 rand. If using the other, it's going to be $2 on USD. It's not exactly $2, it's less, it's like few cents. But the more it's like actually makes up. So the simple understanding of this, whatever you make in terms of pips will double in terms of money. If the market moves 50 pips, if the market moves 50 pips and you're using a lot size of 0.01, if you're using rands, okay, the profits on that trade will be 100 rands. 100 rand. That's per trade. That's per day. You know, you're better off. You're not doing any physical stuff. You're not working hard. You're not putting any efforts. You're making 100 rand a day. So the same 50 pips on 0.10 can make you 1,000. $0.10. The same 50 pips on one lot can make you 10. So it's more like, okay. So most of you do have millions. The only thing is missing is the 1, but you have the zeros. So that's 10,000 per lot. Now, what is the similar thing here? The amount of targets, it's the same. You don't change the targets. The target remains the same. But when you change the volume based on yourself, you know how much you have, how much you want to fund, the volume itself, it changes. If you use 0.10 per trade, which means you can make 1,000 every day, from Monday to Friday, you can make 1,000. And this is on gold, I have to say that. Mostly I like to trade gold. Does 714 method works on most things? Yes, it does. But I find gold more profitable. Because on gold, if you want to go heavy by using a standard lot, you can, and you can make 10,000 fast. If you want to just trade normal, you can by using 0.10, and then you can make like thousands, 1,005, all that type of amount by using 0.10, which is average. And then if you want to go low, you can make 0.01, and you're making like hundreds in terms of your profits. So I think that is fair enough. Whereas on Nasdaq, if you trade that thing, it's just like explodes, whether it's going to explode up or explodes down. So you can't really calculate anything. So I think that is quite unpredictable, right? Yes, we need money, but then let's not be greedy. Like, we want it now. You want everything now. You will be rich. You must have that confidence. You will have money, but let's apply this, right? You know, most of you, guys, I've never worked. That's another thing. I've never worked a day in my life. Like, I mean, like registered work. I've done, you know, like small jobs here and there while I was in school. But I've never, like, really had a job. To say I'm proud, I have a job. Okay, I'm going to cut that one. Okay. So I've never had a job, right? So my point on going to the job site, in your job, your salary remains the same. Even if you strike and you burn the road, innocent roads, you burn all the tires and whatnot, whatever you burn, even cars, end of the day, your salary won't go up. You work overtime, you do all your hard work, they put like 0.01% increase on your salary. So what does that tell you? No matter how much you work, you won't get an increment. That's how it is. So now, take the very same mentality and apply it here. Making so much money is not about trading every day. You can just go in once, boom, you're done, you relax the whole week. That's how I trade. I don't trade like every time. I'm not trading like before. Don't trade like a broke person. Most people, they just keep, keep entering the markets again and again. Just take one trade, because you are even able to account. Most important thing, accountability. So it's not just about you taking trade non-stop, taking trades. So just take this one trade. Imagine if you can take your 100 Rand, let's say you're making 100 Rand for 5 days. That's 500 per week. You take your 1,000 times 5, that's 5,000. No one will pay you that money. You take the 10,000 times 5, that's 50. It's not money you're making from Mashaya or whatever. It's money that you are making for yourself. Very much important. So, and this is just 1 week. So even if you are unemployed, like this one, yeah, I think we should put unemployed here. Even if you're unemployed, making 500 Rand a week, that's a lot of money. Yeah, but you have the confidence of a working person. Yeah? So if you're making 1,000, this one is for graduates. So even if you're a graduate, you can make 5,000 a week, yeah, which is fair. And then this one, permanently employed, can make about 10,000 every week. Permanent employees, but those are very broke, man. And I got into so many debts over the years, so it's kind of heavy. Okay, so, and then over here, you can make up to that amount. All of this amount is the result of doing the things I started with. So you're doing the same thing every day and you're applying consistency. Yeah, 50 pips is not really a lot. Let me show you something. What you're looking for. Only 2 candlesticks. That's M15. So that's about 30 minutes you get your 100 Rand if you're a mama's boy, your 1,000 if you're an unemployed uncle, and then your 10,000 if you're a hustler, you know. Those people who take people's phone after work. So that's how you, so that's not really a lot. So within 30 minutes, your TP can be hit, whatever you're looking for, you can make. So you take that mentality as you've been paid for the day, in and out, and you're done. This is not really that hard, you will see. Amehla akho mancane, so I don't trust you. So now, that is very small, and that's the only small thing that makes women happy. So yeah, Yabo, I told you. This is the first thing that is small that will ever make women happy. Like how? Suqedile njalo. Sathi angetha sivali. So your tippy will hit faster than him. Right. So now, that is the actual last figure, which is mostly important. But it all starts here on the first one. Basically, what I'm saying to you is that every day between 1 and 2, you will draw the vertical lines based on the times when your alarm ring. And then between these two price points or these two times, you want to see price action if it will go up or will it go down. If it's gonna go up, it will sell after 2. If it goes down, it will buy after 2. Yes, we can buy it exactly based on the reason, exactly on the opening price at 2 o'clock, or I think I should say time here as well. So these are your reasons. Oh no, the pips also was not supposed to be here. So you enter exactly at 2. That's why you enter for reversal, aiming for that 50 pips. Or you look at the structure, you see eventually it's down. That gives you a second point. So you buy. Or the market is sitting at the opening price. Then you enter again your trade. Execution, it means you place a buy or either a sell. People are mostly inclined to buy in the mind, like buy, 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 buy. So they have that, but this is the primary structure of what you are always looking for. And then on the second slide, you have something which is part of a continuation. I said that the market sometimes will delay the movement. It will move a bit early. So it will move before 1, and then you see like a small pullback, and then comes back to opening price at 2. And then afterwards, it continues. Sometimes it will move around the right time, it goes up, and then later it overlaps down, and then it goes up. Sometimes it will do this red line. Go up correctly, reverses here, and then it goes up. That's a continuation, okay? So you don't say the 714 method didn't work. You'll say you just had a blind spot or a minor understanding. And then the other scenario is this scenario where of the bearish markets. Mostly you will see this when the market is like continuously selling, because you won't find a reason. You'll be like, what is happening? You know, so you just check on the hard time frame, maybe H4 or H1, see the actual momentum. Oh, it's bearish, okay? Then you take your trade. So you can see here, market is coming down, retraces here, goes down, also here, goes down, and then that's it. But I'm still gonna do another chart anyway, so you're gonna see it clearly. And then lastly, the actual amount. You can build a structure of this. It's not about being a hustle. That's why I say Forex trading is not a hustle. It's not about hard work. If you want to be a hard work, go in the mine, go somewhere, be a hustler, sell something. Yeah, well. But if you really want to make money, go do this strictly. The reason why I teach you this time of the trading, that's why I made most of my money. That's why I've made most of my money. You see? So you having to do the same thing, you can also be part of that, and then you can make your own money. What month is it now? June? July? Yeah, it's July, beginning of July. I'll still be around for the week. So some of you already buy during the week, you'll see the results. And you'll buy me my gems in. Yeah, so now we are going to move to the charts. But before we go to the charts, take a short break. Say what?